Hello, hello, hello. Happy Thursday. Week is almost over. How is everyone doing this morning? Good morning, John. See? Now you can see the room behind. I forgot my green screen. Hold on. Forgot the green screen. I knew I forgot something this morning. Oh, well. So you can see my office has some sliding doors out to the backyard. Back there, sort of nice. I can open the door. Had it open yesterday afternoon. It was 71 degrees. But the Midwest and East Coast are freezing. Did I say good morning, Patrick? Oh boy. See, Sterling, good morning from Iceland. I mean, Greenville, North Carolina, where we have 3 inches of ice laying around at a temperature of 26 degrees. Sorry about that, Sterling. I hope it melts soon. That ice is actually worse than snow. I've been through a number of ice storms in my life. And ice, I will take snowstorm over ice storm any day of the week. Any day of the week. Ice, it's just a nightmare. Good morning, Jacob. We used to get ice. When I lived in Dallas, we used to get ice storms too. Thanks for putting in the news. The IRS is expected to fire about 6,000 workers today. What else do we have? I can't. Cameco says 10% tariff on Canadian uranium would raise prices. I do agree with that. And you all know where I stand on uranium long term. Good morning, McRangers. What else do we have? Okay, we have the initial and continuing jobless claims. I'll get to those in a second. Good morning, Heinrich. Good morning, all. Good morning, Mark. Good morning, all. Hello, Bull Strike Cheetah with a enthusiastic hello with an exclamation point. Hello, Charles. Yeah, thank you. Give always shout out to Sterling is always welcome, John. Good morning, Royal Palms. What else do we have? Good morning, Richard. Well, yeah, I know. It's just like magic, isn't it? That green screen going up. I just find it less distracting. The only reason I put it up, I might stop doing it for a while, but I like the white background that blends in with the figures. Otherwise, you can't see the figures if I highlight something fundamental. No problem. We actually had Walmart and Bobble were the big ones. Walmart was a beat, but guidance was stinky. Walmart guidance was stinky. That's all the way I can put it. Can you check on Meta? We will just remind me. So, hey, David. Dog doesn't like either. Your dog doesn't like snow or ice. Good morning, Anissa. So I've lived in Dallas and now Maryland for now. Where else do we have in common? I don't know. I've lived all over the country. I lived in Maryland too. Missed my Maryland crab cakes. And lived in Dallas. I lived in actually just north of Dallas in Prosper, Texas. Right around the corner, had a property there, right around the corner from Deion Sanders Ranch. So, actually, a beautiful property it's probably the best backyard I've ever had, with the outdoor living area. My son is nagging you buy NVIDIA for him as it goes back to 135. I told him there are better ones and others that I can see growing fast. He sticks with it. Should I give in or not? Again, it's the time frame on the trade, bull strike. Again, long term, you're gonna have to write. If you're talking a 10-year hold, you're probably okay. If you're talking something for 6 months, it's a lot of risk in that. Frisco. Yep. Yeah, my mother years ago had a townhouse, and my sister lives in Frisco, and my mother had a townhouse in Frisco. And while I was looking for property in Texas, I stayed with my mother in her townhouse in Frisco. Then I moved up to Prosper. So, little sidetrack there. But let's get to the market announcements and evaluation, because that's what we're all here for. Initial jobs claim slight climb. Unadjusted was a big climb. Unadjusted jobless claims was a big spike. So we'll have to see if that continues. So 219 versus 215, we have continuing jobless claims 1869 versus 1870 prior, and prior was 1845. So slight bump up there, Unadjusted claims, though, really rising. So we'll have to see, again, if that sticks. My big thing also today was Philly prices paid. I mean, this is a regional index, But last was not 31.90, and now we're coming at 40.50. So from an inflationary standpoint, that's not disinflationary. Again, we have a lot of stickier inflation coming around. Good morning. Told them 5 to 6 years. Again, you might be okay in 5 to 6 years, but you're going to have to, if you're buying stuff around here, you're planning on holding. There is no trading around that unless you're going to try to do stuff like write covered calls and other things to harvest once it stalls, that really stalls out. I mean, it stalled out over the last couple months, but when the market pulls back, that will be one of the ones that will get us probably a substantial pullback. What else do we have today? We have the 4 and 8 week bill auctions. We have the EIA numbers. Remember, they were delayed because of Monday's holiday. They were delayed till today. So, crude traders, take note, please. Then we got Mussolini speaking, Barr, the Fed balance sheet, and Kugler speaking. So, tomorrow morning, remember, we have consumer sentiment and S&P manufacturing and services numbers. But all that is after the cash open tomorrow morning. Today, you have NVIDIA positive, some other chips minor positive, NXPI really leading the semis today, Tesla slight, but Walmart down 4.5% off of, again, they beat, but their guidance was not good. Costco down in unison. A lot of the consumer defensive retail aspect is trading lower in conjunction with sympathy to Walmart. In terms of groups, you can see consumer defensive down almost 150 basis points, leading the bearish side. So only basic materials is the thing that's most positive, but a lot of really mixed markets in the middle. We have a lot of mixed action up here near these all-time highs. Fed watch, still first cut in July. First cut in July, nothing else to talk about there. We're still in neutral mode. Schiller PE 38.75. Let's see if this can get above 39. Boy, this is just continuing to climb higher. Again, that's the thing that worries me about this market too. We don't have a triggered massive topping signal, but the market, either earnings have to really start growing or stock prices have to come down. You know, it's not going to camp out here forever. Alibaba was a beat. Alibaba actually gapping above very key resistance. So Alibaba fans, as long as that key resistance turning into support holds, it could be opportunities there. Mike, hold on. Mike, can you cover Palantir? David Atkins and I were texting about it yesterday. I've been in it since 34.50. I'm waiting for a significant pattern to sell. I do have a trailing stop. Our Walmart, yeah, bouncing back a little. But, I mean, we're still, and everybody's still in buy the dip. Now, yesterday, closing above the very key level, but now gapping below it. I'm still using that very key level. I'm still using the key levels. I'm still watching. Why am I still watching this level? Because you see how it got above there. Then we had the sell-off into and after close, and then here when the market reopened, see how it reinforced that level right here? See how it reinforced that? We had a break above it, so that's still going into the open today. I'll be looking at this 61.57 area, 61.58, 61.57 area. Do we have a little mini double bottom? Let's just see. And yes, it is a little valid. And look, that takes it to yesterday. The second target takes it to spike high. So I'll also be watching that. The key level, that is 61.55. I don't want to see follow through that 61.57. But overall, still, minor support now is reestablished yesterday with the candle bodies here. So minor support is right around here. Reinforced major support. So you have a support zone between 61.31 and 61.24 on any sell. If you start breaking 61.24, I'm looking back closer to 61.05 area. So right there, you see we're still basing with the rising rotation zone. Still basing here. Interesting thing is that double only takes us right just shy of the next key level, that 61.71, and it's still got some heavy lifting. Again, 0.5 on a scale of 1 to 3 of bullishness. So still in the slightly bullish camp. We're still getting dip spot. The NASDAQ, really pay attention. Really pay attention to this area right around here now. Right around this 22, 140. Very key support, even on dip belows. I mean, you can even dip below down to about 22, 105, but that's the support window I'm watching. You start losing 22, 100, then I'm into a clear path down, and then I'm watching for the bigger pullback. So far, a sideways corrective channel. So, in order for me to get sustained bullish, it has to get above 22, 300. Let me move this down about 22, 300 is very key for any breakout. Otherwise, that's resistance for any short-term trades. Overall, nothing else has changed with the rising rotation zone. So this slightly still favors an upside break. Not a guarantee, so don't put all your eggs in one basket, but favors an upside break and really pausing gear at the harmonic level. The Dow, let's see, let's do the count off. This is too far extended now to the right, so we do not have a potential double there anymore. No more potential double top. We are just consolidating higher, so I'll watch the short-term area I'm watching is 44,400 as key support, or if that's broken, turning into resistance. And the key breakout level is about 44.9. Russell, let's see how this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we have a few more days before this potential double bottom, 3 more days to be exact, becomes invalid. Other than that, it's, your key resistance today is 22,300. That's just where it happens to be. Key support is 2263. Markets are really coiling up. Really coiling up. And again, as I talked about before, if you're looking for something, I'd be structuring stuff with some potential volatility risk for longer term, medium and longer term plays. We're coiling up for something. Doesn't mean we have to break lower, but we're definitely coiling up. And if we can't break out the futures or sustain these new highs in the short term, I'll start shifting them to another rollover play. Just not quite there yet. DAX, with the sell-off yesterday, really, this is now going to be the secondary reaction. So I'm going to be watching for the secondary reaction. Doesn't have to happen today, but I'm going to start watching over the next few days for any bounce plays, and that's going to tell us if we're getting to a more substantial topic pattern in the DAX. Notes, not much to talk about. In the note futures, still key resistance 109.07. Very key support coming in at 108.26. So nothing to do in the middle for me there, sitting there. Same thing with yields. Tried to pull back a little today, but we're still caught in a major consolidation range that we were in January. We broke a little lower, we broke a little higher, and we're back in that consolidation range. Still watching that we've kissed this trend line goodbye. Still watching for yields to start climbing again, but not there yet. Dollar index. We talked about this. All right. So if you're getting something on return, remember what I watch for. Remember what I watch for. Oops. Not that what I watch for. I watch for the return. Remember, between the trigger point and the candle bodies, on any bounces, I watch for that, and we hit the declining rotation zone. Why I'm showing this is that's something I've taught before. Let's say you were to get in something like this with a short dollar index trade. I would keep a very tight stop, especially if the dollar index enters. Look at this. It's in potential double bottom. Why would I keep a tighter stop? Because you can have really good potential reward, really limit your risk. And since this is in potential double bottom territory, if this were to turn around and trigger the double bottom, does that fully invalidate the trade? No, but do I want to ride it a lot higher and really skew things? No, I'd say okay, because again, that would then be back above key resistance if that were to trigger on a closing basis. So I would be keeping a tighter stop. Again, this is teaching material. This would be an instance of much tighter stop because this could be turning into a channeling double. Much tighter stop with really good reward to risk. Look at your potential reward to your risk. So that's an area you could use another pattern that's potentially forming. Now this could just keep the dollar index could roll over and hit the targets, and the double might never trigger. You don't know what's going to happen, but this is an area that I definitely consider using a much tighter stop on a double. Hope that little teaching thing helps people where you have a pattern within a pattern. So that's the way you look at. So we have crude. Now we had that little double triggered yesterday. Here's the double coming back. Interesting. See, coming back. If you look here, between the peak and the candles, coming back, catching the 4-hour rotation zone, and nice rotation back up. Now here's another example. It's already hit the first stop level. So technically the invalidation point for the trade, I know I got a lot of lines on here, is 71.17. Okay? In the short term, this is entering double top territory again. Right here, this could be a short-term double top. And you have the EIA numbers coming out. Let's just see. See, we're back above the 75%. So is it in potential double top on the short term? Yes. So would this be one I want to ride down to 71.17 to invalidate the pattern? No, especially with EIA numbers coming out. So since this is in potential double top territory, which even if I went to conservative targets, we don't know if that sides in yet, but look, that takes it below 71.17 potentially. So I don't want to ride all this down. So I know where my stop would be below 71.73 on a closing basis. Here's another pattern within a pattern. Potentially. Now, EIA numbers could come out still long because you can't just say, oh, I'm exiting early because we have a pattern, because this double top may never trigger. This could just keep climbing and finish the double bottom pattern and even roll into the bigger double bottom pattern. But that's where I'm using another pattern to help with my stop level, help determine where a stop level is. Again, don't be afraid of being stopped out. What you do is you put your stops where the probabilities have shifted. Okay? And you should be grateful then, because then you're limiting your risk. So we can't control what's going to happen. And this is true. I don't care if you trade crude. I don't care what you trade. We could do this on stocks. This is the same kind of pattern within a pattern that I'll look for to help me do the analysis, just like we talked about yesterday with the cluster area to determine where to raise stops, where to take profits. Please let me know if that makes sense. Gold, still getting a lot of selling pressure up here. A lot of selling pressure up here. The double was invalidated. The only thing, we're getting to cycle bottoms on the daily. We're still at weekly cycle tops. So we can consolidate / pull back here a bit. Does that invalidate the long-term position in gold? No. Remember, we still have a rising daily rotation zone and a rising weekly rotation zone, but we're very extended for the weekly rotation zone, which is why I'm more in the lines of a horizontal pullback right here, a horizontal sideways correction to gear up for the next push higher in gold. So would not crowd stops in the long term. What else? Silver, still trying to get above, still trying to sustain above the 62.5, closing right at that 33 level yesterday, just above the very key support, but silver's also getting some selling pressure here. All right, the yen. So we had a potential double bottom, which again, that was the only thing I said could get me short-term bullish. We've now rotated down. Remember, I also said the magnet price was 87.5. I put on the harmonics that would invalidate the double, and look, we had a cluster right there. And that's right where it's traded to. So that has taken off the potential double bottom. And now we fulfilled the 87.5 rule. Does that mean it has to stop here? No, but it's coming into some very, very key support area. So from a short perspective, would be moving down a stop, okay, to see how it reacts in terms of this area. And there is no more potential bullish pattern at this point. Euro, this is sort of interesting. Pulled back to very key support level right here and bouncing here. So I'm going to be watching to see, especially if this closes above yesterday's high, would be a little % B buy and a potential front run pattern for a double. I'm paying attention. This might not even trigger today, but I'm paying attention to that. What else? Spiders. We have the next harmonic level, just around 613.29, running up to, I think, 613.23 yesterday. So that's in the harmonic area. And pausing, now we're getting the slight gap down. But key support is 609.75 still. If you're looking for a support zone, it's about 608.50 to 609.75 for very key support. So this little slight gap down does not bother me. From the bullish side on any rotation back up, it would be to the gap fill of yesterday, 612.93. Then if it takes up to 613.29, your next harmonic is 617.50. The Qs still pausing at all-time highs. Yesterday made an all-time high closing. Slight gap down today. Your very, very key support I'm watching here is about 635.70. Here's your support zone, raising this up a bit to 634.30. So that's my key support zone on any pullback. Bitcoin trying to run up against very key resistance, so I'm also paying attention to this today, but that still level is 98,150. All right, what did I forget? We wanted Meta. Hold on, we wanted Meta. Meta, which is now pulled back towards the bottom of the rotation zone in very key support and setting up a potential %B buy. So I'd be paying attention to yesterday's high, and that would be a secondary reaction play. You see here, it's still overextended from the weekly rotation zone. So this is where I'd be really watching. This could be a short-term play only, and then to structure something like that, my first area to raise a stop if this were to trigger, and this might not trigger today, because if then we close below the rotation zone, I'd be shifting to neutral mode in the short term in Meta and probably watching for the slightly bigger pullback. However, if this were to trigger, then my at least raise a stop area would be between 718.15 and 723. Now, if this gaps down below yesterday's low, which it looks like it's going to do, then I'd ratchet this down. But I'd be looking at the 50 to 62% harmonic if a buy pattern triggered as a definite stop raise. If it does not trigger, then I'd be patient and sit on my hands because of where it's extended. That does not mean this is a long-term top yet. We do not have a long-term top. By the way, NVIDIA, looking at the bigger picture, let's take a look at that monthly. So it's returned to the monthly rotation zone and rotated back up. Still, this is a very richly priced stock. So this would not be an area I'd look to do long-term buys. It would be short-term plays only. The key area at this point for me is just below 100, around 98. 98. We start breaking down from there, watch for the bigger correction. Other than that, it's in a whole bunch of consolidation, but still making lower highs. The NVIDIA still has to prove itself by getting it back above 148.91 in the short term. In the short term. So, VO looks good. VO, yes, that's a mid-cap ETF. Very interesting pattern right here. So you see the quad top, very strong resistance and looking to gap above that. So as long as that holds on any pullback, that is sort of a nice potential breakout pattern right there to tackle the most recent high area. Thank you for pointing that out, Richard. Can I cover Palantir? Thank you for reminding me, Sterling. Palantir. All right, now very overextended from the weekly rotation, monthly rotation zone. There's the weekly. So even to get back to weekly rotation zone, you're looking at 93. Now, gap down here to the bottom. This is our gap down today to the bottom of the rotation zone and very key support. Very key support right here. If it starts losing this area, you have a gap left behind. Your next major support base is until about 84. So if it starts closing below these key levels in the daily rotation zone, I'd be watching for then the bigger pullback. And 84 is into the weekly rotation zone. In the short term, though, was this a major topping pattern? Not yet. Now, on any bounce, again, your very key areas are the gap fill and the 50% harmonic. So on any bounce, if it falls short of that and then rolls over, that is not as strong stock anymore. It's going to be very interesting to see how this trades today. You still have a lot of dip buyers coming in at every little dip. So do keep that in mind. People have not thrown in the towel on dip buying. Why should they yet? Because the market keeps just grinding higher. So that would be the very key level I'd be watching on a closing basis. And if we start closing below that, I'd start watching for a bigger pullback. All right, let's just take a peek at the open. Let's just take a peek at the open. Not a horribly weak tick opening, a slightly negative, minus 400, but that's in the slightly weak. So, going to be watching, if the tick rolls over and takes out that 400 with selling pressure, then I'm going to be watching that very key support area in the S&P. The very key support area being based off the opening range, this 6142 to about 6144. If this holds and the tick starts ticking up, it's got to start sustaining above 6153 and then get above 6156 for me to get in bullish mode and potentially trigger this double. The double bottom's still in play. You see it right here. And for any trade above this, it has to sustain on a 1 hour close above 6155. What is this? Okay, that's where we sit. Again, thank you everyone for tuning in. I really appreciate it. And we'll see everyone tomorrow. Bye for now.